Have you ever seen a stock report great earnings and then just sit there? And then out of nowhere it explodes? Well, McKesson just gave us a perfect example. They dropped a stellar quarter, the market's initial reaction was basically a shrug, and then, boom, a 16% surge. So let's get into it and dissect this massive move.
So yeah, this is the number that really turned heads. A 16.5% jump in a single day on huge volume. I mean, this wasn't just a good day for the stock, it was a fundamental reevaluation of the entire company, and it all happened in a flash.
But here's where the story gets really interesting. Right after the earnings hit the wire, the stock actually dipped a bit in after-hours trading. So what changed? What happened between that little dip and the massive rally that followed? What did investors chew on overnight that completely flipped the script from kind of meh to wildly bullish? Okay, so it all starts with the basics, right? The headline numbers. Before anyone on Wall Street really dives deep into strategy or gets a feel for the CEO's tone on the call, a company's got to deliver a clean, undeniable beat. And that's exactly what McKesson did. It was just a really solid performance top to bottom. Adjusted earnings per share, or EPS, came in at $9.34, comfortably ahead of what the analysts were predicting. Revenue also came in hot, hitting over $106 billion for the quarter. You know, that's an 11% jump from the year before. This wasn't some complicated, messy beat. It was just a clear, strong signal that things are running smoothly. So the headline numbers were good, no doubt. But the real rocket fuel for this rally, that was found deeper in the report, and more importantly, on the earnings call. It was all about the why behind those numbers, and crucially, what management sees coming down the pike.
CEO Brian Tyler and his team just kept hammering these points home. Disciplined execution was the big phrase, but they really backed it up. They kept pointing to their high-value growth areas like oncology and biopharma services. You know, these are the higher-margin businesses that are becoming a much bigger piece of the McKesson puzzle.
And here's a perfect example of that strength. The company did a jaw-dropping $14 billion in distribution revenue from GLP-1 drugs this quarter alone. That's a 26% jump year over year. It just goes to show McKesson is perfectly positioned to capitalize on one of the biggest trends in healthcare right now. It proves their specialty distribution network is a killer asset.
Right. And when a management team feels that kind of momentum, they want the market to know it. The CEO's own words here were the perfect setup for what was arguably the most important part of the entire earnings release, the updated forecast. Now this right here, this is the crucial point. They didn't just raise their full-year guidance, they raised it and they narrowed the range. In Wall Street speak, narrowing the range is a massive signal of confidence. It basically tells the market, hey, this wasn't a fluke. We are firing on all cylinders and we know exactly where we're going. And let me tell you, that kind of confidence is absolutely contagious.
So look, a strong quarter like this doesn't just happen by accident. It's the result of a very deliberate, multi-year strategic shift that's reshaping the whole company. Let's zoom out and look at that bigger picture for a second.
For a few years now, McKesson has been all about simplifying its business. They just finished getting out of Europe entirely, which lets them pour all their focus and money into their higher growth, higher margin businesses here in the US. The plan to spin off their medical surgical unit, that's just the next logical step to make the company even more focused on its most profitable parts.
And the results of this strategy? Well, they're pretty hard to argue with. Over the past year, McKesson stock is up over 58%. That absolutely crushes the S&P 500's return of about 12%. So this isn't just a one-quarter wonder. It's a story of sustained outperformance that's being driven by a really clear strategy.
So you've got a clean beat, you've got a super confident guidance raise, and a long-term strategy that's clearly working. What does that mean for investors going forward? Well, it's time for the next call. Based on everything we're seeing, our prediction is that this momentum just keeps going. The strength they have in specialty drugs and oncology, plus that intense management focus on running efficiently, should lead to another really solid quarter of results.
Okay, as for the stock price itself, a 16% jump is a huge move for a company this size to digest. So we expect a little bit of consolidation here, some sideways action, while the stock finds its new footing. After that, we see a steady upward trend as more and more of the market gets the memo about McKesson's transformation.
And all that leads us to our rating. Just for context, when we say outperform, it means we expect the stock to do better than the overall market average over the next year or so.
So our call on McKesson is a firm outperform. When you put it all together, A clear, focused strategy, flawless execution, and heavy exposure to the fastest-growing parts of healthcare, well, that's just a compelling recipe for continued market-beating returns.
And finally, as always, before we wrap this up, we have to get to the necessary legal disclaimer.
Just a reminder, this is not financial advice. This explainer is for informational purposes only. You should always do your own research before making any investment decisions.